Live from Bloomberg's world headquarters in New York, I'm Shonali Basak.
And I'm Tim Stenovec. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Tim, Bitcoin is taking a summer slump. It sits at the lowest level in more than a month. Outflows from digital assets are hitting the crypto market.
We're going to talk about this volatility and the road ahead with crypto with Meltem Demirors, a CoinShares Advisor.
And crypto startups are seeing a slowdown in funding. Edith Yeung from Race Capital joins us to talk about the opportunities inside and outside of the United States.
All that ahead over the next half hour. First, though, we start with a snapshot of the market, and look at that, just red all around. Bitcoin touching a one-month low. The prospect of higher rates for longer leading to some pain in Bitcoin and the wider crypto market. Over the last 7 days, Bitcoin down 4%. All coming at a time, though, when we're seeing new record highs when it comes to equity markets. The S&P 500 hit its 30th record this year just yesterday. In fact, stocks and bonds have delivered better returns than Bitcoin in the second quarter of the year. It's quite a turnaround from what we saw in the first quarter when digital assets outperformed traditional markets by a significant degree. And it's not just Bitcoin moving lower today. We got Ether and altcoins such as Solana, Tether, Dogecoin all moving lower today as well. Ether down 2.7%, Solana down 6%, Tether just going into the red, moving from green to red just now, and Dogecoin down about 8.2%, Shonali.
And let's zoom out, look at the weekly performance here of Bitcoin, because as you mentioned, it has been seeing quite a slump. It's hit a level last seen in mid-May. Last week's higher for longer messaging from the Federal Reserve does pose a challenge for speculative investments such as crypto. And you could see so much of the love you saw in crypto was earlier this year when you saw the advent of those Bitcoin spot ETFs hit the market here. And you have lost a lot of that steam with the last 3 out of the 4 weeks seeing outflows, Tim.
Well, speaking of outflows and losing steam, that's what we're seeing when it comes to flows for crypto products last week. About $600 million was pulled from digital asset products just last week. This is the most going all the way back to March. This data from CoinShares International. Again, this is all about rates. Traders have scaled back expectations for the Fed to cut rates, posing a challenge for speculative investments such as crypto, Shonali.
And we're going to bring in CoinShares Advisor Meltem Demirors here because, of course, we've been talking about that sour mood here in crypto lately, Meltem. And, you know, earlier this year when a lot of people started buying into the market with those ETFs, there was a big question on whether this was the top, whether if you bought in now, you would see a lot of gains in the longer term. How do you answer that?
These are all great questions. I'm calling it sideways summer. We had the winter of our despair. We had some thawing and an incredible 2 quarters with record inflows into ETFs. As of today, 16 billion in net inflows, really blockbuster performance across the 9 US Bitcoin ETFs. I think what we're seeing now is exactly what we saw in March. We had a hawkish FOMC last week. CPI still coming in hot. Expectations of rate cuts were being priced in. Volatility also really low. Trading volumes, we traded 22 billion last week. This week, we're looking at around 11 billion in trading volume. So volatility is down, trading volumes are down. I think there's a lot of uncertainty. And again, the question we always look at CoinShares is where are these flows coming from? And the question throughout the summer is going to be, what is the story around flows? Who are these net new buyers? Where are they coming from? And more importantly, what is it they're buying? It's really a tale of 2 cities in crypto. We can dig a bit more into that as well.
Well, what do you know about these new buyers? Where are they coming from? Who are they?
These are great questions. And again, I think what we're seeing this cycle is historically one of the great things about crypto trading data is trading happens on chain, settled on chain. So we have the ability to look at the Bitcoin ledger, the Ethereum ledger, and see where activity was happening. The ETFs have really obfuscated a lot of that data because settlement isn't happening necessarily on chain. Coinbase and some of the other larger authorized participants in these ETFs are not settling until day after. Maybe they're dividing volume between wallets. So it's more challenging to get the data. We get it after the fact. We did get Q1 13F filings from hedge funds, and I was personally shocked that there weren't more large funds buying. We did see a few larger U.S. institutions participating, but by and large, it's still driven by retail and a lot of rotation from people holding assets maybe on-chain or on a Coinbase, rotating into a product that's traded in a brokerage account. And then the second thing we're seeing is a lot of rotation out of the grayscale products into IBIT, Fidelity ETF, and other lower fee products as well.
Sideways summer, Meltem, but how can you be sure that the next move forward isn't significantly downward?
There's no guarantees in crypto. If there's anything I've learned, I'm always surprised by this industry. What I will say, I think what we've seen is Bitcoin was still up 50% for the year, Ethereum around 40% to the year, despite a slow start in Ether. We're seeing it buoyed by this news of a pending ETH ETF, potentially some flows materializing from there. I think the big question here is, with more assets flowing into ETFs versus Bitcoin held on exchanges, for me, the big question is, how is Bitcoin going to perform versus alts or these higher risk, sort of longer tail crypto assets? So far, performance there, historically, it's Bitcoin runs first and then alts start to run, driven by wealth creation in Bitcoin. Now with money going into the ETFs held on brokerage accounts versus Bitcoin held on crypto exchanges where there's access to these assets on one screen, I think that effect has been greatly minimized. And we see that across the board with underperformance in everything outside of Bitcoin and Ethereum.
Now, Meltem, how do you think through the prospects for Ethereum moving forward? There was a lot of questions around what an ETF would do in terms of drawing new interest into it. But of course, Ethereum is not as widely known as Bitcoin had been for the last several years. How do you think about that dynamic moving forward?
I think this is a really interesting question. I think for institutional allocators getting comfortable with Bitcoin, for most investors, frankly, Bitcoin's been around for 15 years. It's been widely discussed, widely mocked. Now it's being accepted as an asset. You have Larry Fink, Paul Tudor Jones, some of these luminaries in the world of traditional finance going on and endorsing Bitcoin's role in an investment portfolio. But again, we haven't really seen these massive institutional flows materializing yet. If we look again at 13F filings, if we look at Bitcoin exposure on the institutional side and these disclosures being filed at the end of Q1, still a lot of retail activity. I think with Ether, the story is even more challenging. Awareness of Ethereum, awareness of the supply and demand dynamics of Ethereum, awareness of the growth potential of Ethereum is still limited. That being said, I do think crypto has earned its place in an investment portfolio. I think as more and more institutional investors and the investment banks start to cover Ethereum alongside Bitcoin, perhaps we'll see that narrative materialize. But what I always go back to is price drives narrative. Really, the story in crypto is always price drives narrative. So I think in order for there to be material interest and inflows into Ethereum, we're going to need to see some relative outperformance compared to Bitcoin. And we just haven't seen that yet. Ethereum's really struggled to rally against Bitcoin.
Well, speaking of stories, I'm curious about the next chapter in your story, Meltem, and what comes next for you. Now you're an advisor at CoinShares. Previously, you were chief strategy officer at CoinShares. What's your next move in the space?
That's a great question. There's a lot of things I'm interested in working on, but I'm not going anywhere. I'm going to continue to stay in asset management and in investments in the crypto space. And when I know Tim, you will be the first person I call, and I'll share it right here with all of your viewers.
That is what we like to hear.
Meltem, thank you so much. That is CoinShares Advisor Meltem Demirors with her many interests in crypto. We'll keep an eye on everything she's up to next. Now, coming up, Edith Yeung joins to discuss the state of crypto venture capital.
And Tether launches a synthetic dollar tied to the price of gold, which has been hitting records all year long.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
In many ways, they always say that kind of the place to understand Bitcoin the least is the United States, and maybe the place to understand it the best is Argentina. But there are many places in the world where you just get a different perspective on how value flows from person to person, and certainly across Europe, there's just so many great development teams working on this problem.
And that's Ledger's Ian Rogers on the show last week after his firm opened its headquarters in Paris. Meanwhile, Australia due to list its first spot Bitcoin ETF on Thursday. The VanEck Bitcoin ETF will debut on the ASX exchange. Other players vying for a Bitcoin ETF include BetaShares and DigitalX. Cboe Australia listed a round of Bitcoin funds 2 years ago.
And we're going to discuss the best places to invest in crypto with Race Capital general partner Edith Yeung. Her firm's portfolio includes Databricks and Solana, just to name a few. And of course, there's a lot going on in the world of both of those assets right now. But Edith, if you think about the way that the ecosystem is evolving moving forward, people, of course, in the more mainstream world do look at Bitcoin. They do look at Ethereum with the ETFs. But when you think about the potential for the tokens outside of those two, how do you think about where the next big play would be?
Yeah, so first off, it's so interesting, like for me to hear Meltem with your conversation earlier focus on institutional investor point of view. But from where I come from, sitting in Silicon Valley, we're very paying close attention to sort of like the altcoins of the world. The key thing is, crypto VC is back. I think last quarter is like 2.9 billion, which is been invested to over 600 companies, and about 29% increase quarter over quarter, which is a great sign. But at the same time, I think like the mood is a little bit different than before. I was just chatting with a hedge fund friends in Asia. Alpha 9 was telling me that institutional investor, yes, is excited about Bitcoin and Ethereum, but they do place close attention to altcoin, but a lot more, I guess, more savvy this time. And the key thing is sometimes what institutional investors don't like to see, which is when a VC, which means us, invest too much money in the hundreds and millions of dollars. And when all these tokens are fully vested and unlocked, is not necessarily good for the altcoins. So sort of compared to the last cycle, which I'm continue to be bullish on Solana, and I also place close attention to the Telegram Ton token. And those are really like the two sort of from the last cycle, now is still strong and standing. So it will be very, very interesting to see this cycle, when more and more crypto VCs is coming back to market, are they being thoughtful about their investing schedule? Are they really kind of think through the true use case in the venture space, which one of my companies called Human Finance is so interesting to see now using stablecoin crypto to sort of help with cross-border payment. We're talking about like billions of dollars in transactions. So it's really, really excited to be back in the market.
Edith, I'm wondering when it comes to retail excitement, what you're seeing out there right now and the metrics that you're looking at, because I know it's a cliche, but back in 2021, I would regularly get in an Uber or a Lyft and the driver would talk to me about crypto. That has not happened since the crypto winter.
Yeah, it's interesting. So I just presented a Hong Kong Web3 report and consensus a few weeks ago. The excitement in Austin is definitely not the same compared to Hong Kong or Singapore when I go to other conferences. I think the US mood in terms of regulatory environment is not getting the taxi driver excited about crypto at all for now. But having said that, I do think that things are improving because US government clearly know that we need to do more to make sure that we stay ahead of the game. But I have to say, being a native from Hong Kong originally, every time I go back, like people are excited. I think in Asia particularly, regardless is the RWA's use case or gaming or NFT, people are just excited. And there are definitely people on the street. The Hong Kong taxi driver are more excited than the American taxi driver with crypto for sure.
Edith, that's fascinating. I want to go back to another thing that you had said here. You were talking about Human Finance and the work around stablecoins. How important is the stablecoin world to the broader crypto ecosystem, and how vulnerable is it to U.S. regulation?
I think stablecoin worldwide is a super important topic. U.S. in many sense, I think, being sitting in Silicon Valley, we need to get ahead of the game because I'm looking at Hong Kong, actually just launched this year the stablecoin sandbox. And for the past 18 months or so, they literally went worldwide and talking to Circle, Ripple, Visa, Alibaba of the world, to make sure that government really are on top of regulations, to basically have very clear guidelines to approve various different institutions to be able to support stablecoins. So in that sense, in the cross-border payment, if we just purely let other people to define what stablecoin is about, it's really not good for the long-term finance ecosystem. So I think U.S. really need to get our act together to catch up with in Europe with MiCA, or in Hong Kong or Singapore, which is already have very clear regulation to support it.
Okay, you say we need to catch up with Hong Kong, Singapore, and Europe. What specifically would you advise U.S. regulators when it came to stablecoin legislation? What do you want to see them do?
I think just to start with, to be a little bit more clear on which way we stand. I think it's great to see Fit 21 that got at least go through the House, but still we don't know. Like we need faster regulation. It's just that to the rest of the world, U.S. regulatory environment always seems a little bit disorganized and a little bit chaotic. And I think and then I think for the U.S., unfortunately, a lot of things are still going to wait and see who's going to get elected by the end of this year. I do think that what is really, really funny when I was in Austin, that I literally see both sides of the House presidential candidate actually have a voice in a crypto conference, which I think that both candidates know that, like crypto now, 52 million Americans now own crypto in America. This is a really large population that will really swing the vote. But unfortunately, I don't see all these things will play out until after the presidential election.
Raise Capital General Partner Edith Yeung, thanks so much for joining us on Bloomberg Crypto. Do appreciate it. Well, coming up, why Tether has launched a new synthetic dollar that correlates directly with gold prices.
And earlier this hour, we spoke with David McCormick, former Bridgewater CEO, who is running for a U.S. Senate seat. And he says America must lead on the way for crypto.
I was always worried about the national security implications. And I think what's become clear is that we are in the next great wave of innovation with crypto and blockchain. And if America doesn't embrace it, we're going to be left behind. And by embracing it, we can create great jobs, a great source of innovation.
Tether, the company behind the stablecoin USDT, has created a new synthetic dollar that is backed by gold. Bloomberg's Mike Regan is here to explain exactly why this is going on. What is the purpose of Tether doing this? Of course, we know that USDT is very popular, backed by dollars, but why then inch into gold?
Yeah, well, I think the big picture is Tether obviously wants to sort of diversify its business beyond just USDT. There are questions in Europe and elsewhere about what stable coins will survive the sort of heightened regulatory environment. So Tether's making a lot of sort of diversification bets. They investing in crypto miners. They've made some investments in artificial intelligence, even some medical device companies. And with this project, what they're doing, it's really pretty fascinating. They're actually buying gold, storing it with a custodian in Switzerland, making tokens that represent that gold. So then you can buy the tokens and basically ownership in gold in token form. Then what you can do is you give those tokens back to Tether, and they give you a synthetic dollar, a tokenized stablecoin basically, like USDT, but one that is related to gold. So it's over collateralized, meaning say you put $100 of gold tokens on deposit with Tether, they'll give you $75 back. So why would you want to do that? Well, if you're bullish on gold, you're happy to own the gold, but then you can take those dollars back from Tether and go invest them elsewhere. You speculate in crypto or put them in a lending protocol and make even more yield and returns off of that investment in the gold.
So I'm wondering who exactly this is for, Mike, if you're thinking about it from the perspective of the organization. Who are they trying to appeal to with a product like this?
Certainly there's a little bit of overlap between people who are, gold bugs, for lack of a better word, and Bitcoin enthusiasts.
And I was going to say, like, a crypto backed by gold. It's like you're hearkening back to the, years ago when currencies were backed by gold, when the U.S. was on the gold standard.
Right. So I think they assume there is some demand for this, but I think if you take another step back, it's almost a proof of concept for them for this new platform they have called Alloy, I suppose is how you pronounce it.
Like the metal.
Like the metal, yes. And they clearly have ambitions, as they've said, to do other things like this, to tether tokens to the value of other assets, whether it's another currency or who knows. They haven't really explained exactly what the next steps are, but they clearly want to make it a broader.
What's the biggest risk behind this?
Well, I think the market risk is the main one, obviously. If you're bullish gold, you might be willing to take that risk. But if the gold price does go down, then what you have to do is either provide them more collateral in the form of those gold tokens, or you get liquidated. So that's clearly the market risk is the main thing. Now, obviously, there are people who still have a little bit of suspicion towards Tether itself. But you got to look at Tether over the last few years. There was so much scrutiny, much mud slung at them, but that USDT has maintained that dollar peg. So they've earned a little bit of trust in the market, I think, for a project like this to succeed.
Mike, just 10 seconds. How will we know if this is successful?
We'll watch the amount of money that's locked up in it. It's just announced yesterday, so we'll check back and see how many people are actually playing in this scheme.
Bloomberg's Mike Regan. Thanks so much, Mike, for joining us. Always good to see you. That is going to do it for Bloomberg Crypto. Join us again next week, though, on Wednesday, June 26th. This is Bloomberg.